Hey everyone, I'm Akın, the co-founder and CEO of Bondi Finance. And crypto is currently missing out on a $2.5 trillion opportunity. But we're here to solve that. Because we tokenize publicly traded emerging market corporate bonds to deliver stable, high, and uncorrelated yields on-chain. We're addressing two key issues. First, the crypto space currently lacks stable and high yields that are uncorrelated with market conditions. You're either stuck between volatile and low yields of options like lending markets or synthetic assets like Ethena, or stable but low yields at saving rates of tokenized treasuries. But our assets bridge this gap perfectly, providing stable yields of up to 20% backed by real mega corporations. The problem on the traditional finance side is that these bonds are highly illiquid and inaccessible, because 85% of them have minimum investment thresholds of above $100,000. They're completely broken. The nice thing about these bonds is that they have lower default rates while paying higher yields than US corporate bonds. So they're a very lucrative asset class. It's an amazing opportunity. And we know these assets well. My co-founder and I have been friends for 10 years and business partners for 5. And we've had $30 million of assets under management, where we deployed fixed income and currency arbitrage strategies in both Turkey and Argentina. And with our dollar-denominated fixed income strategies, we've consistently outperformed the S&P 500 returns. We made investing in bonds simple. Users simply connect their wallets or just log in with their social accounts and participate in bond token offerings in a completely abstracted, gasless way. And the beauty of our bond tokens is that they are DeFi composable, meaning they can be traded, lent, and borrowed permissionlessly. What's more is that we fractionalize these bonds down to $100, making them extremely accessible. How exactly we tokenize bonds is we first pool user funds in funding phases. After we reach the target amount, we off-ramp the funds, purchase the bonds in traditional markets, and mint the bond tokens. We launched on Base last month and already completed our first bond token offering, raising $205,000 for our first bond token. And we aim to achieve $10 million in tokenized volume within a year and $100 million of tokenized volume within 3 years. We have massive growth potential because the market cap of dollar-denominated emerging market corporate bonds is $2.5 trillion today. And as we transition Bondi into a DAO, DAO members will be able to create tokenization proposals, turning Bondi into an engine for tokenization, getting us ahead of all other competitors. Our revenue model is simple. We take a 0.3% fee from our secondary market trades and a 0.5% commission off of bond token minting, interest payments, and burning at maturity for principal payments. We're currently raising our pre-seed round, and our ask is $1 million. This will give us an 18-month runway to obtain the necessary licensing to scale globally and expand our team to focus on distribution across regions. You can follow us on our socials or just scan the QR code to visit our website. Thank you.
So you buy the bonds in the secondary market, right?
Yes.
And who's the custodian of the bonds?
Right now, the custodian is our local broker in Turkey. We're at an MVP stage. Currently, we hold the bonds in our balance sheet, but with our pre-seed raise, we'll be able to create a segregated account company and have US custodians or international custodians custody the bonds.
So what happens between the custody and the on-chain? Who regulates that and who guarantees that?
Right now, we're a Panama corporation, so we're in compliance with Panama regulations. Right now, we're in an agreement with our clients, with our users, basically. But with our, when we obtain the Bermuda Class M license, the custody we'll be working with investment managers, and the custody will be completely on the custodian side, like Citibank or huge custodians. So, and the bond tokens are self-custodial. Since it will be a segregated account company, bond token holders are directly will be directly entitled to the bonds, and even if our operational risks will not pose any danger or damage to any bond token holders.
Okay, thank you very much, Aki.
Thank you.